The German government is under mounting pressure to rescue the euro. Chancellor Angela Merkel is struggling to defend her austerity policies against calls for more spending to stimulate EU economic growth. For more on the German view, we welcome Dr. Thomas Mayer. He is the chief economist at Deutsche Bank in Frankfurt. Dr. Mayer, what really is the best way out of the euro crisis, to cut debt or to stimulate economic growth?
I think the most important measure that we need is a restoration of confidence. The financial market turbulence, the recession that we see in Southern Europe has really at its root a loss of confidence. Now, you cannot increase confidence when you pile more debt onto over-indebted states. What you need is a sensible program of debt reduction in these states that are suffering from over-indebtedness. And you also need to have structural reform because that's essential to kickstart growth. So measured fiscal adjustment and structural reform, I think, is the way to go to restore confidence, and then growth will come back.
Can Europe really afford more new debt to stimulate economic growth?
I doubt it. I mean, some of the countries, most notably Greece, but also others, are in trouble because they have too high debt ratios. The market doesn't want to lend to them anymore. If you pile more debt onto this, their market access does not improve. In fact, it's getting worse. So I don't think that this is a viable way to go.
Would a euro-wide fiscal union work?
I'm a bit skeptical about fiscal union. First of all, everyone understands something different of this word. Some people think fiscal union means Eurobonds and lots of transfers from strong countries to weak countries. Others understand fiscal union as a sort of regulatory system for your budgetary decisions. I think neither will work. A mutualization of debt and large-scale transfers will, I think, create centrifugal political forces. Countries will not be willing to pay for other countries' sovereign decisions. So therefore, mutualization of debt is not the way to go. Mrs. Merkel wants to have a system of control, the fiscal pact. This is what she understands in fiscal union. This is a bit like establishing speed limits on highways. So you say, no more than 130 kilometers per hour. As long as you stick to the speed limit, you are fine. When you're above, you will be stopped by highway patrol, you will be fined. That's roughly what the idea here is. But I'm afraid that when they practice the system and they stop the drivers going more than 130 kilometers per hour, every driver will show them a diplomatic passport and will say, I'm not bound by this. I'm a diplomat. I'm sovereign. So I don't think this will work either. So what I think we need is to go back to the basic principle that sovereign countries are responsible for their sovereign decisions and liable for their sovereign decisions. So countries must go bankrupt, must get a debt restructuring like Greece did in case they cannot no longer pay. That's the only way that I think we can handle this situation.
Should Eurozone countries be allowed to default?
They should be allowed to default, yes. Of course, we will have to make sure that the external effects of such a default are manageable. And the case of Greece has shown that this can be dealt with. But the threat of default is, in my view, the only really effective disciplinary force to make governments live within their means.
There has been a great deal of talk about Greece exiting the Eurozone. Can the EU really even kick Greece out of the Eurozone? Would this work?
No, there is no way to kick Greece out of the Eurozone. There is no legal basis for that. The Greeks themselves do not want to go. When you look at the polls, 80% are in favor of staying. Of course, 60–70% do not want to go along with the program. So it's not a question of Greece formally exiting EMU. They don't want it. They can't be forced to do it. It's a question of whether or not one keeps paying the money that is paid under the program to them. I think if they don't fulfill the program requirements, then we should stop paying. There may be a case for taking over the external debt service, because this is largely now money flowing to the ECB. The ECB is now the largest creditor near term to Greece, because they have not restructured their claims on Greece. So they must be paid, otherwise they look pretty bad. So therefore I think there is a case for staying here engaged and helping them to pay the external debt service. The other area where I think we probably should stay engaged is the banking sector. We have already spent significant amounts of money to stabilize the banks. It is important, I think, that the Greek population do not lose any money which they have in the banks, because that would be a bad demonstration effect to other countries, could induce contagion to other countries, could induce populations in other countries to run on their banks. So these are the two areas where I think we should stay engaged. But then we should, if they don't follow the program, we should stop the payments. And if we stop the payments, they will then probably start issuing IOUs. And these could turn into a sort of parallel currency in Greece, which I called the euro, a Greek euro IOU.
Should the EU speed up their proposals for deposit insurance for the banks?
Well, we have presently a debate about creating a banking union, and a banking union would consist of a euro area directed banking supervision and regulation, a euro area bank restructuring and resolution regime, including the funding that goes with it, and the euro area deposit insurance scheme. Now, this is a big thing. I think eventually we'll have to have it, but it requires a lot of work, and it cannot be done overnight. It takes probably a year or two or more. So this is where we, I think, have to go to. But in the case of Greece, we could do a first step. If we stabilize the Greek banks in a European structure, outside of the Greek government structure, then we would have already a nucleus for such a banking union, because the banks would be in a European resolution regime, the deposits would be safeguarded by the EU or by the euro area authorities, and of course supervision would also be then in the hands of the euro area authorities. So it could well be that Greece, which brought us the crisis management mechanism, will give us the nucleus for the development of the banking union.
Could this whole rescue process go a little bit faster?
Well, of course it would be better if one could work faster, because one of the problems, I guess the key problem, is the uncertainty and the lack of confidence that comes out of uncertainty. From that point of view, ideally, you should have resolved this issue early on. Considering that, however, one also has to keep in mind that the political process is a slow-moving process. You cannot enforce things overnight. Fortunately, we live in democracies. You have to convince people. You have to take your national electorates along. And in Europe, you also have to come to an agreement at the euro level, at the euro area level, which also takes time. So from that point of view, it's a very imperfect process, but it's the only one that we have.
Do you believe the ECB should do more?
I think the ECB should now do less, because the ECB has jumped into the breach, into the gap that existed, because we did not build EMU correctly. There was no crisis management mechanism. The ECB has stepped into that gap. We do not have banking union, so the ECB has stepped into the gap and is keeping banks afloat. Probably a couple of them should be restructured. So the ECB is in the gap. They should not do more, they should now do less. And the politicians should reinforce the EMU architecture so that we can correct all these things that have so far not been done.
How do you see the value of the euro against the US dollar, say, toward the end of this year?
I think we probably will see a depreciation first as the uncertainties will continue. I don't think that we will see a recovery before the Italian elections. We are now focusing on Spain, we are focusing on Greece, but eventually the biggest game in town, if you want, is going to be Italy. The Italians have an election coming up in May 2013. The way this election goes will decide the way the euro goes. If the Italians elect a government that one could perhaps call Son of Monti government that continues with the economic reforms, then I think the euro has a chance to strengthen, because the whole euro area will be seen on an improving path. If the Italians elect a government that is populistic, that is not serious, that cannot get trust in the market, and the market shuts down for Italy, there is no alternative than the ECB stepping in and buying up Italian bonds. That would seriously weaken the euro and will go down from there.
How optimistic are you really about the future of the euro now?
Well, we have a very important, I think, decision time coming up, and Italy is it. And of course, if I would have to quantify my conviction in terms of probabilities, then I would say 60% that we do the right thing, 40% that the euro will turn into a soft currency. You could call it a successor to the lira.
Do you see many changes coming from France?
I think the French government will turn around if it sees that Italy, Spain, that all these governments will stick to their reform agenda. Then the French will turn around. They will not want to be the only ones out who are not trying to improve their competitiveness, get their fiscal house in order. If, however, the Italian adjustment effort fails, then the French will be disheartened by the Italian example, and there will be no preparedness to do necessary reforms. So this is why, again, I come back to Italy. I think the key for the future of the euro lies in Italy.
When do you believe that we'll start to see economic growth here in the EU?
Yeah, that could happen next year, because I believe that the global economy is not in so bad shape as the financial markets presently believe it is. If the rest of the world looks okay, Germany will be okay. Our exports in Germany are always important, but this year we see also a strengthening of domestic demand on the back of strong employment growth and accelerated wage growth. So take-home pay will be improved and therefore consumption will be improved. So if Germany is okay, that should give at least some help to the struggling countries here in Southern Europe. So I think that next year we should have some growth again in the euro area.
Do you believe Chancellor Merkel will change her stance on government spending and euro bonds?
I would expect her to stay firm on this because she has built this up as a very principled position. So she cannot easily go away from that position without getting challenged by her political opponents. So I think she will stick to it. She will also stick to the position she has taken against any sort of mutualization of debt, Eurobonds. And that, I think, will actually help her in the elections that are coming up here in Germany in September or October 2013, because that's a position that is shared by the majority of the electorate.
Are Eurobonds even a good idea?
No, they're a bad idea because as long as we are not a political union, we cannot mutualize debt. You cannot have other parliaments decide over the taxes of your home country. I mean, the Americans went into a war against the British on the claim of no taxation without representation. So we will not have a civil war, but if you would make the German taxpayer pay for decisions that are taken by other sovereign parliaments, it will not work. It would be a violation of basic principles of democracy, and therefore it will lead to the breakdown of EMU.
Dr. Thomas Meyer, we thank you very much for joining INSEAD Knowledge.
Thank you.